AI is becoming so proficient. You must be wondering what the heck is going on here. That just sounds like a bigger deficit, a bigger hole out there. Well, those numbers are over a 10-year period. But I think one of the most important things we're learning is that
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Cathie Wood explains the U.S. dollar index, the DXY, and the federal budget deficit as a percent of nominal GDP, revealing economic insights. Let's watch them to explore further.
We know coding jobs are the number is starting to go down. There are, I'm sure, a lot of entry-level positions that are not opening up because of artificial intelligence and other technologies. So there is a lot of fear on the employment front. I'm going to start going through the charts now, and we'll try and get through them quickly to highlight with pictures some of what I've said, and then to end up in the innovation space. So here again, I've presented this for a while now, but this is what many economists are focused on, the deficit as a percent of nominal GDP. It is close to 8%, and you can see the little X up near 2.5%, 3%. That is Treasury Secretary's goal over the next 4 years. And with the help of Doge and all the cabinet heads now that Trump has called them to help with the streamlining, we think the deficit will get there because of measures that the government is taking now, and because we do believe that tax cuts and deregulation are going to turbocharge nominal GDP growth. The best way to grow out of a deficit, as Reagan did, or at least started the process in the early 80s, is to grow at an accelerated rate with increasing productivity. And as you can see in the early 90s, through 2000, the combination of the Clinton administration and the Gingrich Congress really did get us on the right path, and we ended up with a surplus that we have really not seen since the tech and telecom bust. We actually think we will see one. It may not be in this during this administration, but the wheels in motion, just like in the 90s, we think will carry forward. The momentum will carry forward. On the next chart, again illustrating tariffs, that was the source of government income in the early days of this country. And as you can see, the income tax and corporate tax rates did not come into existence until the early 1900s, nor did the Fed. And you can see the trade-off that's taken place. We think that President Trump is thinking about bringing back a little bit more of balance here. We'll see if he's able to accomplish it. But I think, importantly, we'll need those tax rate cuts to offset the deleterious impact of tariffs. Now, many countries will offset tariffs by devaluing their own currencies, meaning the purchasing power of the dollar goes up. That's certainly what China did in the first Trump administration.
Altcoins have taken a heavier hit than Bitcoin during the recent market correction, leaving many investors wondering when the rebound will begin. While Bitcoin has managed to stabilize slightly above its support levels, Mid and small-cap altcoins are suffering deeper declines as investors shift capital toward more stable, larger assets. Historical trends suggest that these downturns can pave the way for significant rebounds in altcoin prices once market sentiment improves. The current weakness in altcoins may represent a classic accumulation opportunity for long-term investors. Cautious buyers see this dip as a chance to enter at lower prices, anticipating that the rebound will eventually outpace the losses experienced during the correction. However, timing remains crucial, as past cycles have shown that altcoins can experience prolonged periods of stagnation before regaining momentum. Some market analysts believe that a strong rally in altcoins could follow once Bitcoin finds firm ground and investor confidence returns. For those willing to accept short-term volatility in exchange for potential long-term gains, now might be an ideal time to consider accumulating undervalued altcoins. As the market navigates these uncertain times, investors are advised to conduct thorough research and maintain a patient approach until the next uptrend emerges confidently.
Okay, on to monetary policy. We've shown you this this chart for quite some time. Money growth is 3.9% on a year-over-year basis. That's in the purple there. It had been negative, and monetary policy works with lags. That's why we put the green line, which is inflation. We've lagged it relative to, or I should say, pushed ahead the money growth numbers. And as you can see, there's a little bit of consternation that inflation has not continued down to the 2% area or less. As you also know, we expect it to do so. The burden of proof is on us, to be sure. I think there has been a lot of pricing behavior recently as companies anticipate tariffs as part of their input costs and are trying to get ahead of it. But we think the resolution will be to the downside here, sort of following what money did. And one of the reasons our conviction about this has grown is the velocity of money, or the rate at which it turns over, is starting to roll over. When the velocity of money is moving up, people are confident, they're willing to let go of their money, splurge a little. That tends to turbocharge whatever monetary growth is out there. When the velocity of money turns down, then that detracts from the money growth out there. So on this next page, you can see the very long-term chart of the velocity of money. It has been in a downtrend since 2000. I think the reasons are, first, the tech and telecom bust was a real shock to the system. Then we had a little bit of a cyclical rebound in the 04-05 time period, and then continued down primarily because of the excesses that became clear in the housing sector, led to the crisis, the global financial crisis, which again put a lot of fear into consumers and businesses. So again, they hung on to their money, and that was exacerbated, of course, during COVID. There was a collapse in the velocity of money. You know, people seized up and just were very afraid to spend, wondering if we were going into a global depression. We've had this cyclical upturn from that extreme decline, and you can see we're starting to tip over. And if you look at the year-over-year percent change of velocity, which you see here, you can see that velocity turbocharged money.
Bitcoin is experiencing unexpected moves that are sending shockwaves through the investment community. Its long history of robust growth now faces a critical turning point as the 1460-day running return on investment, ROI, chart reveals a significant downward trend. Recently, Bitcoin's price has struggled to maintain momentum above $90,000, and its failed attempt to break through this resistance has intensified concerns. The decline in trading volume indicates waning buying pressure, leaving both institutional and individual investors on edge. The shifting dynamics have pushed Bitcoin back toward its 100-day moving average, with market indicators suggesting that further downward pressure could push the price toward the $85,000 mark. With the long-term ROI now at 1.558, long-term holders are witnessing diminishing profitability, a development that has sparked debate among analysts. While previous cycles have seen Bitcoin recover strongly after low ROI levels, the current environment raises questions about whether Bitcoin could eventually reach a break-even point for investors. Nonetheless, history shows that periods of low ROI can sometimes serve as an accumulation phase, setting the stage for a potential rebound toward $100,000. The market remains cautious yet hopeful that Bitcoin can hold critical resistance levels and turn the tide. As investors monitor these unexpected moves closely, the future of Bitcoin remains uncertain, keeping the community on high alert as it navigates through this challenging phase. With investors weighing historical performance and current market signals, the debate over Bitcoin's future intensifies. Will emerging trends reverse the downturn or usher a fresh era of caution? And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.